Hi, I'm Patrick Bowen, co-founder and chief revenue officer for InsurAware. And I'm here today to talk a little bit about the Consolidated Appropriations Act of 2021 that gave our industry a bit of a surprise at the end of 2020. I'm joined by Doug Winkler, who's the vice president over independent and institutional sales at Prudential, to get a view on how Prudential is responding to these changes. Good morning, Doug.
Good morning, Patrick. How are you?
I'm doing great. Let's jump right in. So, Doug, what steps did Prudential take to implement the changes necessary to comply with the changes that were made in Section 7702?
Yeah, Patrick. So look, once we dissected the code change, it was clear to us there was really no ambiguity as to when the code took effect. It was January 1st. So our attention immediately turned to our illustration system. Within 2 weeks, we put a very simple message in every proposal that outlined the Consolidated Appropriations Act and the fact that our quote system had not been updated to reflect the new values. So after that, we got to work on updating the proposal system itself. We were able to get all products in the new values and rates on April 19th for all cash value products. And while that was going on, we conducted a lot of field calls, virtual field calls, training events to discuss what these changes would likely mean to product designs, both for guideline premium test and the cash value accumulation test. On 4/19, the date our proposal system was updated, we did a national webinar. We had about 1,100 customers attend. They wanted to hear about our operational plan as well as to learn about the impacts, the opportunities, and some of the unintended consequences of the code change. So parallel to all of that, the efforts on the proposal system, we had to initiate the plan to update our administrative system that would support the new values of the contracts. You know, it's one thing to be able to propose new values, but quite another to be able to support those values administratively. So Patrick, a lot of work on a number of different fronts to comply with the changes was going on for several months now.
Absolutely. Sounds like a really busy spring getting that all sorted out.
For sure.
So, yeah, I think one thing on people's minds is you know, in most cases with this, target commissions were reduced. And so do you plan to adjust to the new limits?
Yeah, you know, that one of the unintended consequences of 7702 and 7702A changes is the reduction in target premiums for the same premium flow. However, there is a misconception that we've seen in the marketplace where many believe we are keeping the additional profit, we the carrier, due to the lower targets. That's simply not the case. Target premiums, as you probably know, are calculated based on the cost of insurance charges that companies collect. So lower death benefits mean we're collecting less cost of insurance charges. And depending on the age of the client, we've seen death benefit reductions for the same premium flow as high as 50%. Now, one way to mitigate that is to look at the product design itself. So as we dug in deeper on one of the more commonly sold designs, we noticed that in most life insurance and retirement planning designs, they're run using guideline premium test, starting with option B and then switching to option A at the time of income. Well, if you take that very same premium outlay and run it using the cash value accumulation test, what you'll see is a significant increase in target premiums, simply because the death benefit is higher. But what you really want to look at is the accumulated value over time, right? Is it beneficial to the client, to the policyholder?
Sure.
And what we learned is that there really wasn't as much of a net effect to them long-term. I'll say this regarding future compensation. We recognize that there is a significant comp impact because of the way we carriers compensate. Now, we believe there will be an opportunity to look at more creative compensation options, which may include a combination of premium or asset-based structures.
Okay.
More to come in the future on that as we turn our attention to creating new products versus really what we've been doing right now, which is reacting to the code change and getting our product up to speed with 7702.
Yeah, good. No, that's exciting. It'll be interesting to see how that plays out as time moves on. So, how are you all planning to correct and administer the policies that were sold after January 1st, where the illustrations don't reflect, you know, those new 7702 limits?
Yes, that's a great question. One we've been working hard on. So later this month of June, any policyholder that purchased a policy that was sold with the cash value accumulation test, again, after 1/1/2021, and was not provided an updated proposal at delivery, they're going to receive a letter from Prudential briefly describing the Consolidated Appropriations Act, and they're going to get new contract value pages. We're encouraging them to reach out to their advisor for more information if they need it. Now, for clients that were guideline premium tests, there really is no effect to the corridor factors, so they're not going to receive contract value pages.
Okay, great. Well, and I know you had a lot to handle just in a short amount of time to react to this. You're having a little bit more time now. How do you think you'll handle future changes to the 7702 rates if they come?
The simple answer, Patrick, is we're not really sure yet. I know that's probably what you don't want to hear, but we don't expect a lot of frequent changes to the floating rate. However, the code did stipulate that carriers have up to 18 months to comply to any change. So I suspect after we get through the summer, we'll sit down and build a process that makes sense for us as well as our policyholders and you, of course.
Yeah, great. It'd be good to have a little more time to respond to those things.
Absolutely.
I think kind of the prevailing wisdom is that this is a tailwind for us as an industry. Where do you see some new opportunities opening up as a result of these changes?
Yeah, wow. I mean, just about, and you nailed it, just about every imaginable tried and true life insurance concept just got a whole lot better. I mean, low hanging fruit, right, is life insurance and retirement planning, insurance review, and private placement life insurance for sure got a lot better. However, we really can't forget about business planning, right? Executive bonus and split dollar. One of our best selling concepts, which is mirrored loans, also just got better, as well as private and premium financing. It's also possible, as you look at some of these corridor factors, it's also very possible that children policies may come back into vogue, especially coming out of this pandemic. And also, we can't forget about chronic illness planning. So we're launching a new webinar here shortly called 7702 and You, where we're going to take those concepts that I just mentioned to you, and we're going to dig a little bit deeper so that we can kind of start getting our brains and our minds around how we can present these opportunities to our producers, advisors, as well as their clients.
Yeah, it's good time. A lot of activity for folks in sales and marketing with these changes. Sure. Absolutely. So I guess last question, do you see Section 7702 that these changes fundamentally changing how life insurance is positioned, and then maybe ultimately how it's bought and sold?
Yeah, I really love that question because we're viewing this as the perfect storm of opportunity. We have a likely changing tax environment for you and I, coupled with a highly efficient product that now can help clients create tax-exempt savings. Also, if you think about where we were a year and a half ago with a number of different things that we were doing as carriers, I'm going to just pick on one of them, fast track or instant underwriting. We've come a long way. Prudential increased their limit to 3 million. Many other carriers have done the same. So now what happens is these types of sales with the new 7702 changes are going to be captured many more with these new limits. And that's going to make it a lot easier for the consumer to buy the product, to want the product. So the want for life insurance has never been stronger, given also what we've been through as it pertains to the global pandemic. So I think the challenge for all of us is to educate, to inspire, and to motivate new advisors and customers to see life insurance through a different lens, a lens that's focused on why they should want it versus why they should need it. And I think when we do that, we're going to see an unprecedented improvement in life insurance ownership in this country, one of the likes that I don't believe we've ever seen before. Now, Patrick, I really appreciate the opportunity to spend time with you this morning and with the group. And I can't wait for the time when we're all together again and spending time talking about life insurance driving sales in our business and helping consumers want the product. So thank you for the opportunity today.
Absolutely. No, thanks so much, Doug. And thank you for all Prudential does for NAILBA. And yeah, looking forward to seeing you in person come November.
For sure. Have a great day.
Doug. Have a great day.